since the strategy is so popular, want to make sure everybody knows how to do it. And then I want to show you guys how to do it in the different sessions. So I think this will be really great. So as we get started, that I got to share the disclaimer. So as always, I need to remind you guys about the risks involved in this market. You can lose all or more than your initial investment if you're not careful. So please be aware of how many pips you're risking on each trade, in addition to how big your lot size is, and ultimately how that would affect your account if you were to lose money. So make sure that you're going through that process each and every time that you take a trade. All right. Appreciate that, Danny. Yeah. It's my sister-in-law's getting married. Um, um, so like I said, a lot of people coming into town, and like a lot of people from out of state. So we're just trying to kind of prepare a place for them to come. All right. Well, let's go ahead and jump into this. Okay, so the first thing I want to do is show you guys. Let's make sure everybody knows how to do the overnight trading strategy first. I think I'll go through this quickly because we got to move on to the other things that I've got prepared in this call. But basically, the idea with the overnight trading strategy is you're trying to, and this is the same with all the sessions that we're going to teach you how to do this with, is you're trying to get a breakout. That's really the goal. You're trying to get a breakout type of market. Now, not every night the market's going to break out. Hopefully, that's obvious. I think I've had people message me on Facebook and other places who are new to this strategy, and they like I'll teach the strategy and they'll say, "Hey, Steve, I lost last night. How is that possible?" And I'm like, "What?" Like, yeah, it's a strategy. You're gonna lose. It's trading. You're gonna have losing trades, right? I've had comments like that, and I've had comments from people saying, "Hey, I've lost 2 days in a row. What gives? Like, I want my money back. What's going on?" And I'm still like perplexed. And so maybe I'm just not doing a very good job teaching it. So I need to do a better, I need to do better there. But usually when talk to people, it's usually because they haven't been coming to the classes. They like I had a guy last week. I've never seen him come to a live call, but he joined the program and he claims that he's been watching classes. But um, I asked him, I said, could you honestly tell me that you've been using a lot size calculator when you're trading the overnight trading strategy? And he said, no, I'm not using a lot size calculator. I didn't think I really needed it. I thought I could just kind of like take the trade and see how it goes. And I'm like, well, that's like I want to face palm myself every single time I hear those types of stories. Like it's really hard. I got to be more patient. I got to work on my patience with people. But you basically the essence of the strategy requires you to you got to use a lot size calculator. You have to. It's like impossible to make the strategy work because it's dependent upon your ability to use the correct lot size on the appropriate day of the sequence, right? So if you're not following the sequence through, you can't expect a certain result. And so if you're just kind of throwing trades out there, kind of just being like, well, I'm generally taking the right trade, you're going to generally have a result. So I want you guys to have exact results. I want you to have an exact outcome with the strategy. And so in order to do that, we got to follow each rule of the strategy, right? And so it first starts off with an understanding of what we're trying to accomplish. Okay, so what we're trying to accomplish with any of these breakout strategies is number one, what kind of market condition is conducive to success. So the type of market condition that's going to work is a breakout type of market. Okay, so like last night was a breakout market. We had a market that was consolidating during Sydney, and then ultimately during London broke out. Okay, that's a market that would work. Um, of like last Tuesday, this was a breakout market right here. This was a great trade. On Tuesday, we had this win. Okay, so the market was consolidating during Sydney, and then it broke out. So if every day were like this, then we'd all be rich, right? Or we'd it would be so easy. It would be too easy, right? Okay, nothing's too easy, right? So we have to kind of work with the markets. So we're fishing for this opportunity right here. This type of thing is what we're trying to get to every single day. Um, now, It's very important to know your numbers though. So about 1 to 2 times a week, you're going to hit this. Okay. So you're going to get this perfect type of setup right here. Now, a lot of people say, well, why would you trade something that only happens 1 or 2 times a week? And I'm like, why wouldn't you? I think it's just a misunderstanding of like numbers and maybe just a general misunderstanding of how things work in the markets. But the markets are either consolidating or they're breaking out. They're only doing one of those two things. So here's your consolidation, here's your breakout, here's your consolidation, breakouts over here, right? And so the following night, so we had this really good win right here, woke up Tuesday morning to a good win. Then Wednesday, we set up our box and then we had our sell stop here and our buy stop here. And then we got whipped out both directions. Both of those trades just lost. Um, and like I said, a lot of people find it very perplexing. They're like, how could you even lose? Like, I thought this strategy worked. I saw your results. And and again, it's just a misunderstanding of what makes this thing work. So we'll get to that. But 2 to 3 times a week, you should expect the breakout to not break out. Like you're gonna expect the market to not break out. Okay, so you're going to get a false breakout each time. So you get a false, like market breaks down, but then it goes back up, market breaks up, but then it goes back down type of thing. 2 to 3 times a week. So most of the time, that's going to be the outcome. Um, and the reason why we do this is because when we win, our win is so much bigger than our loss, right? So, for example, over here, a few nights ago, this was, like I said, Tuesday morning, we had a sell trade right here that triggered. The stop loss is halfway through the box, and then the target is 5 times. Our take profit is 5 times the risk. And not only that, but we increase the contract size until we get a win, up to 6 days. Up to 6 days, we increase the lot size, right? So that's what makes this thing work is the fact that one, you already have a huge target to begin with. It's 5 times what you're risking. And two, by the time you get the win, your lot size has been multiplied 1.5 times each day until the winner. And so that's why you get those huge wins.
Hey traders, it's Steve from the future. I hope you have enjoyed this video so far. If you are getting value out of this video, be sure to hit the like button, click the subscribe button, and share your trading thoughts. I read all the comments, so feel free to ask any questions you have there too. On a side note, I host live trading calls like this one you are watching every day. Some of my biggest trading secrets I share exclusively to just the members in my program. I host these live trading calls every day, Monday through Friday at 11 a.m. Eastern. I also host a basic training webinar every Monday for the newer traders and the regular COT report and sentiment trading webinars every Wednesday night at 8 and 9 p.m. Eastern for the advanced and aspiring traders. All of these calls are recorded and promptly posted on the members' trading calendars at the conclusion of each call in case your schedule does not permit you to come to the live call. All of my members have complete access to the scanner. We call it Steve's Scanner. This is an institutional grade trade alert scanner that picks the direction of the week on all 28 major currency pairs and includes trading instruments like gold, silver, NAS 100, US 30. Just in the last 90 days, I have made over 3,000 pips just taking the top trade signals from the scanner at the beginning of the week and then just holding those trade alerts until Friday. If you want access to the scanner, you can start a 14-day free trial with the join link in the description to get started. Lastly, if you really want to be a full-fledged VIP member of my program to get access to things like the basic training course, live signals channel, Steve's scanner, trading calendars, and the one-on-one calls with me throughout the month, you can use code YouTube50, that's YouTube50, no spaces at checkout, and save $50 on your first month. Again, just click the link in the description below and apply that coupon to become a VIP member, and I look forward to helping you with your inevitable trading success going forward. Now, back to the video.
Like, so for example, if you look at my journal, so here's my sequence. Here's the overnight trading journal. I had a loss right here on Wednesday morning, both directions. I did lose one trade at full loss and another trade at a partial loss, but I did lose both directions. Thursday morning, I woke up to a loss both directions right here. And then on Friday, I woke up both directions to a loss again. And I'll tell you, I had a lot of people actually message me very frustrated on Friday, even though it was just 3 days of losses, which is totally normal inside the sequence. I just hope those people who were frustrated on Friday kept trading because look what happened, right? Like that's how you come back from you come back from the um, you can easily come back from this, right? And so this win right here just recovers any losses um, from the past, right? And the reason why is because look at the risk right here. So you started off with 0.25% risk. This is why you got to use a lot size calculator because the first day I did 0.25%. The next day I did 0.38. The next day I did 0.57. And then last night I did 0.86 and got the win, right? So that's what makes the difference is you get this win here. Um, that win is ultimately not only is it 5 times the loss on the chart, but your lot size is bigger naturally, right? So like I said, just really important that you go through that process. If you are skipping the lot size calculator, then you are not trading the overnight trading strategy. So I hate to be a little bit kind of blunt that way because I do try to be as kind as I can and understanding, but but it is a different strategy, and I don't know what strategy you're trading if you're not using the lot size calculator. By the way, just on a side note with that, if you're not using here, look at these numbers. Okay, so over the last, here, check this out. Let's do, this is E3. Okay, so E3. Okay, what if I told you that this strategy has only made 202 pips since May 1st? And also I'll tell you I can confirm that it's only made 202 pips since May 1st. So you're kind of it's that's not a lot of pips to make in 3 months. Okay, that's basically 3 months. That's not a lot of pips to make in 3 months. It really isn't. Like you're averaging, gosh, I don't know, like you're averaging like 70 pips a month, 65 pips a month is what you'd be averaging. That's not a lot of pips. So again, if you're just doing it that way, you're probably just breaking even, maybe making a little bit of money. But so the thing that makes this thing cook is the fact that you're using a sequence multiplier. And so in order to use a sequence multiplier, you have to be using a lot size calculator. Um, so I just want to make sure it's super clear, like, because it sounds like I just had a lot of people reach out just saying, hey, they're not having success with this. And then usually when I reach out back to them and try to diagnose what's going on, I discover in the process that they're skipping over the sequence multiplier as if that wasn't part of the strategy. Um, and I'm just, for the record, as early as I can in this webinar, try to just make it super darn clear. You have to use a sequence multiplier and you have to use a lot size calculator. And if you don't, the strategy is just not going to work. Okay. And that's going to help us move into the next part of the webinar that we're going to get to. And then you have to decide while we're on the sequence multiplier here, you have to decide if you're going to use the 1.25 multiplier, the 1.5 multiplier, or the 2.0. Now, I don't recommend this one. I have it listed, and honestly, I should probably just remove it, but I have it listed just because that's what it would be if you were to use the 2x multiplier. And I have used the 2x multiplier in the past with a level of success with the euro dollar. I have hit bust a few times on the 2x multiplier. Um, and generally, what I've seen is that it's not the best way to go. You can actually lose quite a bit of money if you're not careful with the 2x multiplier. Even the 1.5 multiplier can be pretty risky. Yeah, if you're not prepared for what it could potentially do, you could lose a lot on the 1.5 times multiplier. Um, but the 1.25 multiplier is not very risk. Well, there's always risk, right? Um, but you get 10 days, up to 10 days before you hit bust on the 1.25 multiplier. So you get a lot more chances to succeed here. You just won't make as much because with this one, uh, it takes a lot longer to build up a bigger lot size. And so by the time you hit a win, maybe your lot size isn't that big. What was cool about last night is we were on to day four when we hit the win. So we were at a 0.86% contract by the time we got our win last night. And so that's a decently sized contract to have at a one that wins 1 to 5. So you can see how the profits would be a lot bigger there versus if you were only doing the zero point 0.4 or the 0.49 on the 1.25 multiplier would have made money, but you wouldn't have made a ton. So actually, ironically, last night the ideal lot size would have been the 2x multiplier. But again, I wouldn't recommend that you do that just because you can get yourself into a lot of trouble pretty quickly with that one. So anyway, you got to be using this and you got to choose which one you want to subscribe to. I would lean towards suggesting one of these two, depending on your risk tolerance. If you guys need help, I would be more than happy to give you this bust calculator. So this is what I call the bust calculator right here. And this will tell you how much money you could lose if your overnight trade never hit a win within inside the sequence. Okay. Um, so yeah, if you went Yeah, anyway, so we don't need to go all the details. We got a lot of stuff to talk about, but that's what this is it tells you how much you could potentially lose. Looks like if you were to use the 1.5 multiplier, from what I've seen, is you're going to lose anywhere between 6 and 11%. Like 6 and 11.5% is what you could lose if every single trade just did not work out and lost and you never got a win within the sequence. So something to think about. Now you can recover from 11% loss, um, but it stinks because sets you back like a month. Yeah, if you hit bust, it sets you back a month of profits pretty much. Um, yeah, so you don't want it to happen very often at all. But and in fact, it hasn't happened to me on the euro dollar yet. So far so good. All right, guys. So let's any questions about that? Because I wanted to move on to the next part, but I just want to make sure that's very clear. Just because I have had, I think one of the reasons why I'm feeling this way is just because we have had a lot of people sign up for the program recently, and I think a lot of people just want to step right in and not watch the videos and not come. So I'm probably just preaching to the choir here. Like most of the participants I see, like pretty much come to all the classes. So like you guys are the stalwarts. You guys are the ones that know how this works. And so like kudos to you guys because you guys come to the classes. I'm just a little bit frustrated with the people that don't come and then wonder why they're like not having the same results, or at least something comparable or something that we could diagnose. But yeah, like I've had a lot of people I've reached out to, or they've reached out to me, and then I'm talked to them, and they say, "Yeah, I'm not using a lot size calculator. I didn't know I needed to use one." And I'm like, when did I ever say, in what webinar have I not mentioned lot size calculator? Like I always talk about it. So anyway, and by the way, if you don't, if and here's the one that I use. So this one's free. It's just this position size calculator on my FX book. I highly suggest that everybody bookmarks this into their browser so that you can just get it every single day, unless you have one that you already use on TradingView. TradingView has position size calculators. MT4 has a position size calculator. But yeah, when you're going through your sequence, you just basically pull up, the euro dollar, and then you're going to put in your account size, whatever that is. You'll put in whatever risk ratio you're at in the sequence. For example, last night was 0.86, so you'd put in 0.86, and then you'd put in your pips 9 or 10 pips last night was probably your stop loss. And then you'd click calculate, and then that would tell you, okay, this is what I need to accommodate the trade. Right. Okay, cool. So there you go. I just want to make sure that's very clear. So now to the fun part of the strategy and what we're talking about. So today, I saw Paul asked if we could talk a little bit more about how to do this in the Tokyo and Sydney session, or Tokyo and New York sessions, and then specifically how you can roll this over session to session. So you know how right now what we've been doing is if you have a losing day, you come back the next day and do it again 24 hours later, but with a slightly larger lot size. So, what we're proposing, and this is what I'm trying to test out right now, I just haven't had enough time to do it, is this idea of if you don't get, like, let's say you lose the overnight trade, you immediately come back into the market and you trade the same strategy, but for the breakout of New York. Okay, so you're looking for a win in New York to cover your loss from London. And if New York loses, now you're going to go into Tokyo in the third level of the sequence multiplier to try to recover your loss from London and New York, and then try to get that win in Tokyo, right? So you're basically trying to move your capital multiple times throughout the day rather than just once a day with the overnight trading strategy. This is a new thing, right? So like I don't want you guys to think that this is like okay, what everybody should be doing. I don't suspect this will be I actually don't even think this will be something that we've like broadly broadcast throughout the group because it would just be so much work for everybody to trade every single session. Now, I have given you guys the option. Last week, we talked about in the basic training call the option to be able to do this um, like session by session. So if you wanted to just do Tokyo only, fantastic. Oh, sorry about that. Just do Tokyo only. If you want to do New York only, you can do New York only. And there's a couple of pairs you could probably do that with. You could also do just the one we're already doing, which is London only, the overnight, the traditional way of doing it, which is the overnight trade. So there's a lot of different ways you can go about it. I just know we've got several ambitious traders that would like to move their capital multiple times throughout the day and throughout each session. And so I have a proposal on how you can do that if you're, really ambitious that way and you've got the time to set apart, multiple trading sessions. And maybe some of you, what you might do instead is just do two instead of all three trading sessions, you'll just do two trading sessions, right? You'll just do like, okay, Tokyo and then New York or London and then New York, or if you want to do all three. If you want to do just London and New York, that would work, or you do London and then Tokyo, that would work as well. So you can kind of pick which ones you want. But basically, here's the idea. So let's review real quick the rules of the Tokyo session. So we have the Tokyo session coming up next, right? That's going to open up in about 5 hours, 5.5 hours. And let's pull up a 15-minute chart and let's go to the USD JPY. That's my preferred currency pair. I think, by the way, I don't know what your favorite pair is, but I think the USD yen is probably the best pair to trade during Tokyo. It has the best spreads by pretty much all brokers as far as the Japanese market goes. So a lot of people might be like, well, I want to trade GJ or I want to trade Euro Yen. Honestly, those spreads are not that good. Just go straight dollar yen. Honestly, like same thing, like Euro dollar during London, go dollar yen during Tokyo. Don't try to do anything crazy with different pairs. Just keep it simple with the most traditional pair for that particular trading session, right? So euro dollar at night through London, and then for Tokyo, just go USD JPY. So the way this is done, just a little bit of a recap or review of how we do this. So you got to pull up the New York session. Actually, you don't even need to do this. In fact, what I'm going to do instead is just pull up the Tokyo sessions on my chart here. Um, I don't know if you guys can see this very well, but I can't even see it very well. So I'm going to go dark mode because I can't see those yellow I don't, can you guys see it? I can't see it very well. So I'm going to turn my screen dark so I can see it there. So I can see, I don't know if you can see that better, but those are the yellow areas. That's the Tokyo session. Okay. So what we're doing with this one is you're basically taking the breakout trade at the beginning of Tokyo, which is at 0 GMT. Okay, so and that just so happens to be 8 p.m. Eastern. So write this down on a sticky note or make a mental note of it right now if you're interested in trading the Tokyo session. Tokyo opens at 8 p.m. Eastern. Okay. If you live on the Pacific, then that's going to be at 5 p.m. All right. So kind of figure out what that would be for you. And that is in about 5.5 hours. All right. Then what I do is I go back 5 hours from this particular juncture. And so that would put me at 1900 hours GMT. And then that's where I make my box. So a lot of people are like, shouldn't you just do the Tokyo or not the Tokyo? Shouldn't you just do the New York session, the full New York session? Here's the problem. If you do the full New York session as your box, you're going to have way too big of a box. So I don't recommend that you do the full New York session. I just do the last 5 hours. So you can kind of get a tighter consolidation. Then what you're going to do is you just do the same thing that you do with the overnight trading strategy, but you're just doing the last 5 hours before this market opens. Yeah, you'll just do the same thing. Buy stop at the top of the box, and then you ride that. Put the stop loss halfway through your box, which would be approximately there, we'll say, and then you go about a 1 to 5 RR, and then same thing on the other side. You got a short position, and then you go 1 to 5 RR, just like that. Okay. And you're just doing this every single day during Tokyo, right? Same exact process. The only difference is your box, instead of it being a Sydney box, it's more of a New York box, but it's just the last 5 hours. That's what you're doing. Okay. So in fact, if you were to do all of New York, your box would be kind of crazy. It'd be like this would be your box instead if you did all of New York. See what I'm saying? Like that just it's too big of a box to make things a breakout. So I think you just do the last 5 hours. It's kind of what I've chosen to do. You could do the last four, maybe the last six. I've just done the last five. Okay. Um, cool. And then you do look for a breakout. Looks like this day on Friday, this was last night. Looks like this one didn't really break out the way that you would have hoped. Maybe your sell would have made some money for a time, but it was basically done. So what you do with this is you let this run for the first like 6 or 7 hours of, sorry guys, I'm getting called. Um, what you do is you're letting this run so that this goes for the um um until you have to set up the London session, right? So when you set up the overnight trade, you're going to close this. So some people have asked, what do you do with this? Like, do you hold this? So here's how I look at it. If you want to move your capital around all day, then you got to close this before you set up the overnight trade. So when you go to set up the overnight trade, you got to close this guy. Okay. So if he's up, take your profits. Great. If he hasn't hit the stop loss, great. You didn't lose there, but you made some profits. Fantastic. And then you'll just log that into your journal. Um, that way, all your capital is available to move for the New York, or not the New York, but the London session rather. Okay. All right. Let me show you. So let's see. Can we find a day where this won? It looks like trying to find a really good day. It looks like this would have been a pretty good day right here. Yeah. So this was Wednesday last week. Yeah, you would have won on Wednesday here. So here's the beginning of Tokyo, and 5 hours before that would put you at right there. Here, let me fix this. There we go. Okay, so here's your box right there. And then your buy stop actually looks like the buy stop would have triggered and lost, unfortunately, but your sell would have won big. Um, so I'll let that go up to there. And then your sell would have been right here, stop loss about midway through the box. And then, oops, let me put that back right there. And then this would have won. Well, if, like I said, if you don't quite get to the end of the session, like if you get to, if you don't hit your target by the time it's ready to set up the London, then just close the trade for whatever profits you get and mark it in your journal. Okay. So here's the idea. So let's actually kind of go through, let's go over like the last, yeah, let's like do 3 days. Okay. So let's go through this process. In fact, let's start here. Um, um, oh yeah. So let me answer this question. Paul says, I get that part about backing up 5 hours, but how long before closing? Whenever we set up the London strategy? Yes. Yep. So when you'd close the trade, so there's two ways to close. If you're going to trade all three of them and be pretty ambitious and you're like moving your money around all day long, um, I would suggest that you close the trade, any open trades you have, buy stops, sell stops, and open trades at at the moment it's time to set up for the next session. Okay, which that sounds like it's gonna like Paul, it sounds like that's you. Like if you're gonna be moving this money around all day long, then you're gonna want to close this at the start of the next session. So with this Tokyo one, when is the time to set up for the overnight trade? About right here. This is about when you would set up the overnight trade at 6 a.m. GMT, which is midnight Mountain Time, which is my time zone, which is the same thing as 2 a.m. Eastern. So, and then some of you like who live on the East Coast, you're not going to be able to stay up till 2 a.m. Eastern. So a lot of you guys actually can't do this, or you can do this, but you can't do it at that time. You're going to have to set this up earlier. So whenever you go to bed and whenever you normally set up your overnight trade, you're just going to have to close the Tokyo trade early and then just set up for the overnight. So you can accommodate this. Like, I don't want to say you can't do this. I'm just saying you can't do it at that time because it's just far too late to stay up. So you're just going to have to do this earlier. For those of you that have to, do that. Now, I've been staying up till midnight because I live in Mountain Time Zone, and Mountain midnight is the end of Sydney, and it's not been too bad on my schedule. So I've been staying up till midnight, and it's like the last thing I do. I literally do everything I need to do before bed. Before that, I take the trade, and then I just like I'm in bed. That's kind of how it's. I even just do it in bed. Like I have my laptop, and I'll just do it real quick, and then boom, I'm out. Just because I've been just trying to do it at the end of Sydney. Um, but you don't have to do it that way. I don't want it to sound like you have to do it. I've actually been really impressed to see like those in different time zones have actually had about consistent results with us for the most part. Um, even if you don't stay up till the end of Sydney. Okay, so let's go through the process. Let's do this together, guys. Let's go ahead and mock this up together. So let's pretend that we start on Wednesday. Okay, so here is the Tokyo market again. So I'm going to just draw this out. So you'd basically set up your box 5 hours before. Okay, so I'm going to go through a 24-hour period with you. Okay, let's journalize this together and let's do everything. In fact, let's go through the whole process. Let's build a quick journal real quick. Let's do a template. Actually, let's do overnight. Here it is. Let's make a template together, or I'll just use the one that I have here. Let's do this. Yeah. Okay. And I'm just going to start on what day was Wednesday? That was the 24th. So I'm going to do that. Actually, I'm actually going to do this over here in my other journal. I think this will be better. I'm going to duplicate this. Let's duplicate. And I'm just going to call this a test journal test. Oh, I already have something called test. Let's call this test one then. Okay. And let's go ahead and um, yeah, maybe I'll just delete everything from here down. Here we go. This will be good. I think you guys are going to like this exercise together. Okay, oh yeah, and let's just reset that. And let's also reset these. And let's change these all to 0.25%. And yeah, okay, so let's start here. This will be great. Okay, fantastic. So let's pretend that we're starting on the 24th, starting a new day. We're going to do a Tokyo session first. Okay, so I'm going to put in pair USD JPY. And let's set up that trade on Wednesday. And then you'd be like, okay, I'm going to do a long position right here because that's the beginning of Tokyo. My stop loss is going to go about halfway through, which looks like would be about 22 or 23 pips, something like that. And then my target's going to be up here at 1 to 5, like normal. Okay. Then we put in the short position. Okay, this one would have worked. So this is, by the way, this is how you backtest. By the way, if anybody's wondering how to backtest, this is backtesting right here. Okay, and then you would do the full 1 to 5 target, which would be about right there. Okay, so this trade would have triggered your buy. You would have lost first. So let's put that into the journal. Let's just right away put that into the journal. Um, so this was a signal to buy. We would have bought first and it would have lost. Stop loss was like 23 pips. We did lose 23 at a 0.25% right there. Okay. But we had a second trade trigger, right? So the second trade, the other breakout won, right? This trade won this other way. It made, well, let's see, when would we have closed it? We would have closed it at the time to set up for, we would have closed it right here. Boom, 6. So at 6 a.m. GMT, that's the end of Sydney. And at that time, when this closed, you would have made 101 pips. Okay. So you would have made 101 pips when it was time to set up for the overnight trade. So you'd be like, okay, so let's go back over here. You took a trade, another breakout trade on the USD JPY. This time it was a sell. You would have made 101. Oh no, your stop loss, excuse me, would have been 23, but you would have made 101. And boom. So now you just made $1,098 on during Tokyo from that win, but then you would have lost 250 from the false breakout trade. Okay, so what does that mean? So the next trade, you're going to now set up for the euro dollar. Now you're moving your see what we're doing? We're moving our money around. So now we're going to set up for the euro dollar. This will wake up to the next day, which will be on the 25th, and we're still going to use 0.25 because we just won. Okay, so we just won Tokyo. So we're going to keep going down this loop of sequence. So you're basically following the sequence, but you're moving your money around all day long through the 3 different major sessions. Okay. So you're moving it during the Asian market, you're moving it during the European market and the Western markets, right? So London, Canada, right? Moving it through those markets too. So the 3 different main ones you're moving the market, you're basically taking the overnight trade 3 times a day. Okay. That's probably a good way to put it. Overnight trade is 3 times a day. You're just moving money around. So you're following the sequence through session. Okay, so the next trade, we're going to now do the euro dollar. So we're going to move away from here. We're going to move away from the Tokyo session because now we're going to go set up for the next day. So this is going into Thursday, right? But now this is the overnight trade. Okay, so I'm going to pause here. So Paul says, what about trading Tokyo and London, but keeping them separate on their own sequences? You can do that. Here's my only issue, Paul. So it's all about maintaining the trade. Because if you have um like if you have like let's say Tokyo has had a lot of let's say your Tokyo session is like on the sixth day of the sequence. Um well, okay, so I haven't put a lot of thought into it yet, but you could certainly do that. Um, you would just have to keep track of you'd have to have a tab for Tokyo and a tab for overnight for London, and you'd have to have a tab for the New York. So I could see that. Like you could make that work. Um, Let me think about that more. Again, I haven't done back testing. Really good thought-provoking question there though. Um, yeah, so the way I've pictured it is you would follow the sequence for just on the same tab instead of making three different journals for each session. You would just follow it through session, like every session, you're doing it again and again and again. But that's what I've come up with so far. It might be smart to do what you're saying though. So again, I this is super like new to me. Like this is like super cool because we're talking about being able to not just make money with the overnight trading strategy, but like amplifying it like three times, right? Like you're multiplying the potential profit multiple times by having your money work for you all day long rather than just like once a day. So let's find that out. I have to back test. I have to back test to find out if it's better to have three different tabs, like a tab for your Tokyo session and one for London, one for New York, and then or do it the way I'm thinking. So let's just finish what I'm thinking right now. And if we find out that that's not a superior way to do it, then we'll revert back. And I think maybe the three tab, like you're saying, might be better. Um, Okay, cool. So let's go back. Okay, so now what we're doing is we're setting up for the euro. Okay, so we just finished the overnight trade on Wednesday last week. So that's where we're at in this testing, right? And that was a success. So now let's go ahead and change our sessions. Now I'm just going to change this to Sydney so that I can do the normal Sydney box for the overnight trade, right? And let's find Sydney last week. So here was Wednesday, and then you'd wake up Thursday. Let's see, where's this? That was let's see, where am I? Trying to get oriented here. So that was last night, Thursday night, Wednesday night. Okay. So this would have been it right here. So okay, cool. So now you'd come back to the next day and you would set up here for the overnight trade. And we already know what the result of this is. It whipped both directions, right? So you'd have your stop loss about halfway through here on your sell, and then you'd have your take profit right here, um, about halfway through, and that would be about five times, right? And then we already know that that whipped both ways. This one did not break out very well at all. Like it whipped into the buy, stopped out, whipped into this or sell, stopped out, whipped into the buy, stopped out as well. So this is just a loss. Okay. So you wake up the next morning, London did not work out. So now you go to the journal and you're like, okay, I'm going to put in two entries here. I'm going to put in two entries here for, um, for this. And I had a sell that triggered that did not work out. I had a buy that triggered did not work out. And the stop loss on these was um, like, well, we're got a force it to six. So 6 pips was the minimum. So we do 6 pip loss, and you would have lost on both of these trades. So it would have been -6 and then -6. Okay, at 0.25. Okay, so now you're going to set up, if you're going to move your money around all day, right? So now you're going to set up, this is the same day though. So this is the 25th. This is Thursday, the 25th. And now we're going to set up doing this. I like to use NAS 100. So NAS 100. So this is an opportunity to do something cross market rather than just like doing like forex pairs. If you want to use a forex pair instead of NAS 100, which is a CFD, which not everybody will have, you could, if you have US 30, do it US 30. If you can't do US 30, then do um, whatever it is that you can do. Um, I think the euro dollar is probably another good one you could just do again. You could close out your London session euro dollar and just go open euro dollar again, but for New York instead. So you could do that, but I'm going to do NAS 100. So now we got to increase our lot size, right? From the sequence multiplier. So now if we're using the 1.5, we're going to go to 0.38. So 0.38 is what I'm going to put in my multiplier here, 0.38, as I go into the London session or the New York. I hope this is making sense, guys. You're basically just round robin. It's just a round robin all day long. Okay. You're just going through each market looking for that breakout condition. And you're just waiting and fishing until you get that breakout. Okay. So we already had one during Tokyo, but unfortunately did not work out during London. So now we are here in New York trying to make this happen on NAS 100. So let's see what NAS 100 did. Um, and let's do the same thing. So let's go to NAS 100 right here. Um, Paul says, so if there's a win of any size in either direction, we reset to 0.25 on the next market setup. That's correct. Yep, you got it. Okay, so here is Thursday the 25th. Let's change the sessions up. So this time I'm going to have it show me just the New York session, New York only. And then here is the Thursday the 25th. Perfect. And the way you do this is the same way you do with New York. So New York and Tokyo have the same model. So you're going to go back 5 hours from here. So you're going to go back to, 5 hours, and you're going to draw your box like this. Okay. So this one, you do your box just like this. Okay. And with this one, it's the same thing. Like you just put your buy stop at the top, stop loss halfway through, and then your target like that, 1 to 5. And then the same thing with the short position, short right here. This one, as you can already see, did not work out. We can already tell. So it looks like the pips are weird on NAS 100. They're way different. It looks like it was 930 is about how much. Um, just the way pips are calculated here, it was 930 pips. It's just different. It wasn't that the market moved like an absurd 900 pips. That's just business as usual for NAS 100. Okay, so we go back to the overnight strategy, got whipped both directions. So we journalize that, right? Very important to journalize. See, another thing that some people have told me is that they're like, nah, I don't use a journal with the overnight strategy. And I'm like, what? You don't use a journal with the overnight strategy. What does that mean? You have to use one. It's the only way to make this work. So it's -930 and -930. Okay, so now there you go. So now you move on to the next one. So you've done basically a full day of trading, and there was only one success story here, right? You had just the USD yen had a win during Tokyo, and then you just went 4 straight losses through the New York and London session. So that's just going to be normal, right? Then you move on to the next day, which would be um, a new day. So you'd now be trading the 26th. trading day. And then we can add more rows here. We can add another row to this and get ready for the following day. In fact, I'm going to add a few more rows here so that we're ready because you're going to be moving your money quite a bit doing this, right? Okay. So the next day, now that we lost there in the Tokyo session, we got to increase the risk in Tokyo because we lost those other trades. So in Tokyo, we need to increase to the 0.57 is the new risk right there. So 0.57 is what we'll do. So I'm going to go ahead and change that to right now 0.57% risk. And now we're going to go set up for Tokyo the following day. So now let's go back here. So we've see what we're doing. Is this making sense to everybody, or am I like speaking a totally different language? But yeah, you're basically just moving your money around with the break. You're looking for a breakout every single session. And if you don't get the breakout, you slightly increase the numbers until you do get a breakout in any of the one sessions. And that's that. And then that's what makes up for your losses. Okay, so let's turn on sessions again. Now I'm just going to do the Tokyo market so that I can bracket around so that I can do this. Okay, here we go. So here's Tokyo the following day. So here's the Thursday, the 25th. Um, yep, going into Friday, right? Is this correct? Yeah, because we just did this one right here on the 24th. So now we're doing this one, um, which is the 25th on the journal, correct? No, I have it marked as the 26th. Why did I do that? This is marked as the 24th. This is marked as the 25th. Oh, maybe. Oh, I know what I should have done. This should have been marked 24th, 24th. And oh, there we go. 24, 24, 24, 24. This is actually supposed to be the 25th. My bad. There we go. Okay, there we go. So now we go into the USD JPY and then we set it up the next day. So we come over here now and we're going to set up a breakout trade. So here is the beginning of Tokyo. 5 hours before that would be you just kind of take your vertical line and mark it out. There you go. 5 hours before. And then you draw your box. So this is basically a New York box that you're drawing before Tokyo begins. But you're not taking the full New York. You're just taking the last 5 hours before Tokyo opens, right? Then what you do is you just do the same thing that we do with the overnight trades, but you're just doing it for Tokyo. You're putting in the trade. So a long position would go up here, right? And stop loss would go about halfway through, which would put you about like right there. And then your target would be 1 to 5. And then you would do the same thing for the short. Short would enter right there. And it'd be a breakout trade. Let's see, how big is this box actually? It's about 56 pips, so about 28 would be about halfway, so about there. And then a 1 to 5. Looks like it would have hit your 1 to 5 right there, but I think you would have closed this just before you would have set this up for the New York market. So you would have closed it there, or not for the New York, for the London market. You would have closed it there. So you would have made, um, looks like you would have been pretty darn close. It got pretty darn close because it was a pretty good breakout. It got 1 to 4.5. And then by the time you set it up for the overnight trade, the market would have been right here. So you would have made about 78 pips on this trade when you would have closed it. So let's see what the results would have been. So let's go to the journal. Um, you're risking 28 pips on this, and you would have made about 78. Is that enough to cover the sequence? Let's find out here. So this is good. So we actually got a win here. Um, so you basically had a win. You had a loss to begin with the previous day, right? On the USD JPY buy trade that false triggered. Then you had a win on this sell trade and on the other USD JPY trade. Then you had lost both directions during the overnight trade on Thursday. You would have lost both directions on NAS 100 during the New York market trade, but then you would have won here with the Tokyo trade the following day, and that would have been a um, let's see how big that win is. So you can see the wins over here. You can see, okay, so that was plus $1,588. Let's see if that's enough to cover the losses. Let's pull out a calculator here. So you have 1,588 minus 380 minus 380 minus 250 minus 250. And then you'd have minus, oh, that's it. Okay, it's cool. So yeah, you would have made up all your losses. This one kind of stinks because you didn't quite get the full 1 to 5. Actually, if you had left that trade on overnight, if you had just left it alone, it would have hit the full 1 to 5 by the time you woke up in the morning. But again, that's not the strategy that we're proposing. We're just saying, hey, we're just going to move the money around as fast as we can every single day, right? And so that would have recovered. That would have, like I said, that would have finished off right there. So if we go back over here, yeah, you would have made a little bit of profit, like $400, between $300 and $400 extra to spare after the sequence, and then you would just go back to your starting point. So now you would set up for the overnight trade going into Friday, and we already know the result of that, but let's go ahead and type this in. We lost both directions, so I'm just going to type, since I already know what the result was, I'm just going to go ahead and type that in here. There we go. And we had a buy and a sell that lost. But I'll just show you. This is fun, guys. Oh, I just realized we're about out of time here, but basically that's the concept. Yeah, I guess I better wrap up. But basically the idea is you're just trying to get a breakout following the sequence. You're moving your money around every single day, multiple times a day at each session. This would require a whole nother level of dedication. So this would, like, if you were to do this every single day, you'd have to sit at your computer and just be ready every single day, like alarms set, one right before Tokyo opens, one at the close of Sydney and before London opens, one before New York opens. So you're just constantly sitting at your computer. I think, and this is my opinion, I really think you should pick one of them. I don't want your life to get too confusing either. This is more for somebody who's just got all the time in the world. If you've got all the time in the world and you want to try to trade every single session, this is a way you could do that. Um, I know a lot of people are like, hey, Steve, the overnight trade is a lot of work. I just want to trade Tokyo because Tokyo is kind of nice for somebody that lives on like the East Coast. Or just anybody in America. Here's why. Because Tokyo opens at 5 p.m. Pacific or 8 p.m. Eastern. And everybody in the United States lives, unless you live in Hawaii or Alaska, everybody lives within that like 5 to 8 o'clock spot. And usually that's about when you're coming home from work. Maybe you have time for some dinner. Before you even kick on a movie, you can actually take this Tokyo session trade. And this could be your breakout trade that you just trade every single day. You just do the Tokyo one. Okay. And that one's easy because your box is just the last 5 hours. So if you live on the East Coast and you want to set this up at 8 o'clock, just set an alarm at 7:55 p.m. every night. Then you just grab the last 5 hours, mark that box up, put your buy stop in, sell stop in, and then create a sequence journal that you can then start to fill out. See how easy that would be? Like, and that way you don't have to stay up later to do the overnight one. I mean, you could take the overnight one too if you wanted. My only concern with the overnight one, if you're going to do Tokyo and the overnight, is not having enough leverage to accommodate both trades. That may not happen all too often, but it could happen. So, um, all right, guys. So I hope this was helpful. Hopefully, this guy gives you some ideas on how you can trade the breakout using the sequence journal many times throughout the day. Um, Hopefully this was kind of enlightening to see. I'm sure we'll dig into this more in some other future webinars, but yeah, hopefully this was pretty good. Any other questions before we get out of here? Um, but yeah, we've already gone a little bit over time, and that's okay. But I just wanted to share that with you guys. But yeah, congrats to those of you that took this trade last night. Pretty good overnight trade. Really happy to see that win come in. Um, yeah, can't complain. All right, guys. We'll have a fantastic rest of your day, and we'll see you guys in the next webinar. Thanks for coming.